Welcome back to the Path to Profitability Bootcamp. Let's get straight into it, all right? So hopefully you did all the homework that I assigned, and now you're ready for day 2, okay? So just to start off, congratulations on finishing day 1. Now is day 2. Now is where stuff starts to get real, okay? So how does the market move, okay? So the market obviously moves in trends is what we established, right? We have a uptrend, we have a downtrend, right? And consolidation, right? Based on our trends, right? Perfect. Consolidation, right? Uptrend, downtrend, and consolidation. Okay. But there's one major thing, and it's called liquidity. Okay. So what is liquidity and where does it rest? All right. So we have our two trends, right? We have our two trends here. But what is liquidity? So I want you guys to write this down. Liquidity is resting orders that have the potential to create a reversal or bounce in price. Okay, so what do I mean by this? I mean that liquidity is resting orders, right? Resting orders that where are they located? Above highs and below lows. So this is very important, okay? We have the definition of liquidity, right? And we have where it's located, above highs and below lows, okay? So we already established what a high and low was in the market, okay? So let's go down to the charts, right? Where is liquidity resting? Above highs, all right? So liquidity is above these highs. It's above this high right here. It's above this high right here. Above these highs right here. Of this high right here, right? And below lows, right? So it's going to be resting at these lows, these lows, these lows, and these lows, just to give you guys some examples, right? Okay. So these are highs and lows, right? This is where liquidity rests. Liquidity is basically, in short terms, it's the money, right? This is where all the retail traders put their stop losses, okay? So let's say you're in a short position, right? Let's say you think market's going to go short right here, right? You enter like on this little bit right here and you put your stop loss at the high, right? Because you bet that the market's going to go down, right? You're going to short the market. And then you get pushed up and it takes out the high, right? It takes out your stop loss, so you get liquidated, right? Meaning it takes all your assets, all your money away, right? And that's what these big banks want, okay? So as you can see, right, on a chart, there's so much highs and lows, but only at some of the highs and lows does the market actually reverse, okay? So let me find a good, actually, let's go over when does the market reverse, right? Same thing for the long position, by the way. Let's say you wanted to go long, you would put your stop loss at the low, and you would target higher, and then you would get stopped out. So you get liquidated, right? So what is a liquidity sweep? A liquidity sweep is when price moves sharply below a low or above a high and creates a reversal in price in the opposite direction. So if we're in a downtrend and we sweep a low, liquidity sweep, we sweep the liquidity, we take the asset, the money, the liquidation, right, away from the retail trader's stop losses, and then we reverse off of it, creating an uptrend now, right? So we were in a downtrend, previous downtrend, new uptrend, right? Same thing for the bearish example, right? We were in an uptrend, previous uptrend, liquidity sweep with a high, trend reverses, turn to a bearish trend downtrend, right? So that is a liquidity sweep. So this is very important. This is what I take all of my trades off of, right? We need a liquidity sweep. So just eyeballing it, look right here. Where does liquidity rest? Above highs and below lows, right? So we have a high. We have another high that pushes past, right? It sweeps the high, sweeps it, right? And then it pushes in the opposite direction, creating a different trend, right? Perfect. Just like that, right? So now let's go back. So what are the two types of market maker models? Actually, let me do a bearish example just so you guys can understand that one too. Find the chart, right? Okay, right here, right? We have lows. We have liquidity resting below the lows. We take the liquidity and then we reverse, right? We're in a previous downtrend, form an uptrend, right? Perfect. The key is to know when price is going to reverse, though. When it's actually going to be a liquidity sweep, all right? And we'll get into that in much later videos, all right? But I just want you to understand the concept of liquidity. Liquidity is money. Where does it rest? Above highs and below lows, okay? Market moves constantly on liquidity, okay? So now let's get into the market maker models, okay? So right here, this is a buy model, and this is a sell model, right? So what did we say? We said liquidity rests below lows and above highs, right? Meaning there's liquidity here, right? And there's probably some sort of liquidity somewhere up here, right? So what does the market want to do? It wants to take out liquidity, right? So we can use liquidity to our advantage. We can know when price is going to reverse and where price is going to go based on liquidity. So once we get our liquidity sweep, right, and a market maker buy model, right, price sweeps liquidity, we get some sort of confirmation that price wants to go higher, and then we can target other highs or other pieces of liquidity, right? This is a market maker buy model, right? We're buying the dip, right? It's like a dip, right? It dips down, then you buy it back up, right? Market maker buy model, okay? The reverse of it, right? Market maker sell model, okay? We have liquidity where? Below the lows, right? Below the lows, below the low, below the low, right? As well as above highs. So we take out the liquidity, we sweep liquidity, and then where can we target now? We can target the opposing liquidity pools, right? These lows, right? These lows, these lows, these lows, right? So we go from a uptrend into a downtrend. What is that called? That is called a market maker sell model, right? Market maker sell model. Okay, so these are the models that you can identify in the market. So let's just go identify some market maker buy models and sell models. Okay, in the market. Let's find some good ones. Beautiful, right here. There's a buy model, right? Price sweeps liquidity, liquidity sweep, right? And what do? We target opposing liquidity here, 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 and here. Just like that, we target all that liquidity, right? Former downtrend, new uptrend, right? Beautiful. Okay, let's check for a bearish example right here, right? Boom, high, push past, liquidity sweep, right? Where do we target? Opposing liquidity, here. here, and here, right? Market maker sell model, previous uptrend, now a downtrend, just like that. Okay. So let's get back here, right? All this good stuff. And let's talk about types of liquidity, all right? This will be the last thing we talk about today, guys, all right? Stay with me. Types of liquidity, right? There are three types of liquidity. There's two types of liquidity. There's internal liquidity, and there is external liquidity. Okay, so price moves based on liquidity. We've already established that. We have internal liquidity and external liquidity. We already know what external liquidity is. That's the highs and the lows, right? Highs and lows are the external liquidity. But what's the internal liquidity? The internal liquidity is going to be your fair value gaps and your equilibrium, right? Or discount zone, all right? We'll get into fair value gaps and equilibrium in future videos. I'm covering fair value gaps tomorrow, all right? So stay tuned for that. But just remember that types of liquidity, there's two. External is the highs and lows, right? Above highs, below lows, that's where liquidity rests. And internal, inside of the fair value gaps and at equilibrium, the discount zone, all right? So it's that time, homework time. What do I want you guys to do? Identify liquidity sweeps or points where the market changes direction based on liquidity. And identify market maker buy models and market maker sell models, all right? And understand as well the two types of liquidity, external and internal, all right? I want you to identify 10 examples of liquidity sweeps, journal them as well, and find 5. Actually, we'll just do 10, so you can find 5 market maker buy models and 5 market maker sell models, okay? All right, that is it for Bootcamp Profitability, Path to Profitability Day 2. All right, we covered a lot. Look at all this stuff, right? Stay tuned for tomorrow. I'm rooting for you guys. I'm proud of you guys, all right? And I will see you in the next one. Peace out.